guys, welcome to my channel Investing Untangled. Hope you're all doing well. On this channel, I post detailed business and stock analysis videos and also educational content about stock market investing. And if this is something that interests you, then hit the subscribe button and the notification bell and follow my content here. In this video today, I'll talk about Warren Buffett's investment in this Chinese EV company, electric vehicle company that he did 13 years ago and how now it is actually paid off big time. So after 13 years of investing in an obscure Chinese automaker, Warren Buffett's BYD bet is paying off big time. And I like to generally analyze Buffett's moves in the stock market. That teaches us a lot as value investors. 13 years ago, Charlie Munger suggested this investment idea to Buffett, and Berkshire Hathaway ended up making $232 million investment in this relatively small unknown Chinese company that time, BYD. And Munger was actually very confident about the vision of BYD's founder, and this is what he had to say about him. This guy is a combination of Thomas Edison and Jack Welch. Something like Edison in solving technical problems and something like Welch in getting done what he needs to do. And he went on to say, I have never seen anything like this. So Munger's extreme confidence in the management team, in the founder of this company, actually eventually led to Berkshire Hathaway putting in $232 million investment in this company. In late 2008, Berkshire put $232 million into this company, BYD, and owned a 10% stake in this company. And as Buffett recalled, Berkshire initially tried to buy 25% of the company, but Wang refused to release more than 10% of BYD's stock. And he had to say that this was a man who didn't want to sell his company, he told the Fortune magazine, and that was a good sign. And it certainly proved out to be a wonderful investment. And as the EV market has exploded in China, and China is the biggest EV market in the world, and BYD has developed into a major player in the world's largest car market. It sold more than 130,000 electric passenger vehicles last year as it competes for the market share with other rivals in the market. And look at the expansion of this investment that Berkshire did. So the value of Berkshire Hathaway's investment by late 2018, 10 years after cutting that to $232 million check, Berkshire's stake in the company had swollen to roughly $1.6 billion. And in the last 2 years, we've seen a massive expansion in the EV sector. So you can see since then that figure has climbed exponentially amid the Chinese EV market's rapid expansion and a remarkable fourfold increase in BYD's Hong Kong traded shares last year. So Berkshire Hathaway's stake is at 8.2% right now in this automaker, and the investment has grown to $5.9 billion at the end of 2020. So $232 million investment became $5.9 billion at the end of 2020. Something that Buffett is a master of doing. Now, if you look at what price Buffett paid to buy this company, it was around this price. He paid something like $8 in Hong Kong currency, so Hong Kong dollars, to buy this company in 2008. And as of now, the Hong Kong shares of this company are trading at $145. Sometime back, these shares had actually climbed even over $200, so they were trading around $237. And in this recent pullback in the EV sector, they have dropped a bit, but still it is almost at 20x of the initial investment of Berkshire. Now, if you look at the business of this company, BYD stands for Build Your Dreams, and BYD has been the world's largest electric vehicle manufacturer for the last 3 years running in both consumer and commercial industrial electric vehicles. Last year, BYD sold more than 113,000 plug-in electric vehicles worldwide and currently has nearly 40,000 electric buses in service around the world. And their business also seems to be vertically integrated because they have their own battery technology. At the heart of BYD's technology is its batteries. One of the largest rechargeable battery manufacturers in the world, BYD develops batteries for a broad range of applications from cell phones and laptops to large-scale grid-connected energy storage systems. So clearly, BYD is actually into other sectors as well through its battery manufacturing processes. And BYD's EVs ranked number 1 in global sales for 6 consecutive years from 2014 to 2019. So since Buffett's investment in 2008, BYD has expanded and become one of the major and dominant players in this auto sector, in the EV auto sector in China and globally. Now, if we analyze their financials, their revenues grew from 48 billion RMB in 2011 to 177 billion RMB as of now. So a massive increase in their sales. Net income has also gone in the right direction, 1.3 billion RMB in 2011 to 4.3 billion RMB as of now. Now, looking at shares outstanding, the company has actually been buying back its own shares in the last 2 years or so, from 1.6 billion shares outstanding in 2019. They have been bought back and the number has been reduced to 1.1 billion. Book value per share has also increased pretty steadily, and right now it stands at $8.76 in US currency, showing a steady increase in their business. Cash flows have also gone from 5.9 billion RMB to 45 billion RMB as of now. So this shows that this is one of these businesses that Warren Buffett believed in, and it has performed the way he anticipated it to perform. Free cash flows for this company have been pretty cyclical, but it is in the auto industry, and auto industry cycles with the economy, so that can lead to ups and downs in the free cash flows. Now, what is interesting here is if you look at the gross margins of this company, they're actually pretty low, and this is suggestive of this being a capital intensive industry where the capex is pretty high, and that shows up in its net margins also. So you can see the net profit margins for this company are actually pretty low, and Buffett generally invests in companies where the margins are actually on the higher side, the profitability is pretty high, but auto industry is generally capital intensive and they have higher capex. So this should also give us an indication of the current EV hot stocks where, like Tesla, NIO, people are thinking they're like just tech companies, they're not really into auto sector, but at the end of the day, they are actually selling cars, and that makes their business actually capital intensive. So it is more or less the same industry, and going forward, you would probably expect the similar profit margins for those companies as well. And that is the reason why, in my opinion, I think Tesla is massively overvalued right now, because the profitability will be kind of mediocre because of the profit margins in this industry. Now, again, if you look at return on equity, this is also pretty mediocre for this company. Buffett has been known to invest in companies with very high returns on equity, 15% or above. But here you see that this company has lower returns on equity, and returns on invested capital are also on the lower side. So this is something clearly which is unlike Buffett's most investments. Now, if you look at the financial health of the company, the current ratio of this company has been on the lower side, so suggesting that the current liabilities are not really well covered. Right now, it is good, it is at 1.24, but historically, these numbers have been actually on the lower side. Most of the times, they have been under 1. Which I personally do not like, but this could be definitely an industry specific thing. I personally have not invested in any EV car maker, so I do not know this industry that well. But what is very nice to see is that they have very low levels of debt relative to their equity. So debt to equity is consistently on the lower side. I like companies where the debt to equity is below 0.5, and here you see BYD has maintained very low levels of debt throughout. So in my opinion, this investment of Berkshire Hathaway teaches us, first of all, you have to be patient. If you do believe in your investments, you have to give them time to pay off. And second, the importance of the management team. Buffett and Munger really believed in the management of this company and the founder of this company, who wasn't even willing to sell more than 10% of this company to Berkshire. So this suggests how important it is to assess the management team of a company. And third, you have to actually look at what trends will stand out going forward, and then you have to pick the best players. So clearly, Buffett and Munger picked one of the best players in the EV sector more than a decade ago, and it is paying off really big time now. If you got some value out of this video, please consider leaving a like and subscribe to this channel, Investing Untangled. That'll help my channel a lot. For future videos like this and more educational videos on stock market investing, stay tuned to my channel, and I'll see you in my next video.